Hello, this is Robert. I'm a tax attorney here at TRP, and we're going to be going over California Franchise Tax Board liens, how to avoid them, and how to resolve them. So, the first thing to know about California Franchise Tax Board liens is they can hurt your credit. Now, the FTB does not go out and submit it to their credit report, but it's very likely that the credit reporting agencies will go ahead and pick that up because it's going to be on public record. And a tax lien is the government's right to claim or seize your property if you fail to pay your taxes on time. There are different government entities who can impose a tax lien, most common being on the federal level, but here we're talking about FTB, which is state level. One of the frustrations of having a tax lien is that you might have a hard time selling property or getting financing since a lien becomes public record. And it can affect your credit score, but they're not manually sending it to the credit reporting agencies. They just pick it up, like we said. And how do you avoid an FTB lien? You do the minimum payment plan the FTB requires. Unfortunately, sometimes they want you to pay it off in 12 months, and a lot of people just can't do it. So you end up with a lien, and now that you have a lien, how are we going to resolve the lien? So the pay plan. You're going to pay plan, you pay it off in full. By the time, once it's paid off from that pay plan, they're going to release the lien. You just pay it off in full outright. If you do that, the lien will get released. If you get an offer in compromise accepted, which is settling for less than you owe, that will release it. The other thing is wait until it expires. California tax debts do have a 20-year expiration date. However, California always finds ways to extend that on a lot of cases, and it ends up being a little bit longer. But waiting until it expires can take quite a while. And in that meantime, if you don't put your case into hardship or do some type of resolution, they're going to try to collect on you. So once a lien is placed and then later settled or paid off, it will get released, but not withdrawn. So the FTB lien will show as released on your record. If it gets picked up by your credit report, it'll show you had the lien, then it'll show the lien is paid off. They don't withdraw the liens like the IRS. So the IRS, you can actually submit a lien withdrawal once the debt is settled or paid off, and it's like it never existed. The FTB is like it was there, and then it's dealt with. So it still shows in your credit report. It might hurt it a little bit, but it's not as bad as just owing when you have that when you have the lien satisfied. So concluding our guide on FTB liens, the best way to avoid FTB lien is to pay it in full or do the minimum monthly payment the FTB wants. Sometimes risking a lien is worth it to settle the debt for much less than you owe. We had a guy, he owed $265,000 to FTB, and it settled for $225. The liens were then released. It probably was worth the $264,775 in savings to have released the lien rather than to have no lien on the record. I mean, that's a huge amount of savings. And if you need help and want to get the best result, just give us a call. You can reach us at 888-515-4829. Again, that's 888-515-4TAX. One of our expert tax attorneys will give you a free consultation. Even if we can't help, we'll point you in the right direction. So thanks for listening. Have a great week, and we'll be here again.